Morning Call. Broadcasting live from the CNBC-TV18 Motilal Oswal studios in Mumbai.
Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. We are coming to you live from the CNBC-TV18 Motilal Oswal studios. It's a Wednesday morning. I'm Prashant. With me, my colleagues Sonia and Nigel. It's a Thursday morning. It's a Wednesday morning.
I was wondering, I'm like...
Sometimes you say something and you realize, so I got it.
I generally trust you more than I trust myself with the data. So I thought maybe it is Wednesday morning.
Well, I corrected myself.
Okay.
How are things? Looking up?
I don't know. I hope yesterday was not a flash in the pan. It looked really good yesterday, and sometimes things sort of just turn around. I don't know. The SGX Nifty is indicating that it may not be a great start today, but you never know.
I mean, Sonia, I think the market will try and attempt the pullback, right? The simple reason is that it's very unlikely that these bounces last for just one day. So that attempt will be there. The question is, will it be successful? Let's just kind of, as always, start where we left off overnight. So not a pretty picture, right? So the markets here in India, the Nifty, Bank Nifty, etc., have no help from global markets. That's point number one. No help, no support. And the reason is very simple. You had US equities, which started facing selling pressure right at the word go as soon as the bell rung overnight. And there were attempts at a bounce, but all of them failed. The Dow ended absolutely flat. The S&P was down 0.4 and the Nasdaq was down 0.6, 0.67% or so as well. Now, the problem is that the US 10-year, and last 2 days we were saying how the US 10-year perhaps is stalling. It's not quite going to 4%. You can still say it, but the fact is we did hit 4%. We closed at 3.99% practically at the day's high, about 7 basis points higher, day on day, right? So this is worrying. And this basically shows that market pricing of what the Fed will do is increasing quite sharply. Let me give you a statistic. The market pricing of where the Fed funds rate will be by July of this year stands at between 5.5% to 5.7%. 1 month back, 0% expected the Fed funds rate to cross 5.5% by July. So it just shows you now 40% is neither here nor there, but the fact is it's moved up. Markets are repricing themselves to expect higher rates, which perhaps stay higher for longer. The dollar index is the next one. Day on day it was down, which is overnight compared to the previous day, but it hit 104. The low was near 104. It left off at about 104.4. So again, there was a push which came through on the opposite side, the direction you don't want it to go. Data is the problem. Data is still strong. So the prices paid component of the US ISM manufacturing index was strong. In Europe, you had the German consumer price inflation number, which beat expectations. And these are two data points. Germany is the largest economy in Europe, which pushed yields up both in US and Europe. I have to say though, that especially in the US, if you look at what bonds are doing, they're extreme yields, basically. Rates are extremely overbought, very, very overbought. So it's ripe for a pullback. Where it happens, etc., is anyone's guess at this stage. Now, let's come to the market here. As I said, it's likely that at lower levels, SGX is indicating a lower start. I was looking at the FI flow number that was negative. Some 400 crores net sell. It's likely that after yesterday, at lower levels, there is the impulse to try and buy the dip, which continues. After all, it was only the first positive close we had on the Nifty yesterday after 8 sessions. How much of it is successful is the question. So there is where the resistance has come in at. So the Nifty closed at 17,450. The resistance for the Nifty comes in at retracements of the recent fall, the last 5 or 6 days of fall, the high to the low. The first resistance comes in at close to 17,600, 591 to be precise. And then there is the golden retracement, the 61.8%, which comes in at about 17,700. The exact numbers are on your screen, but 17,600, 17,700, those are the two resistance levels. We closed at 17,450. So there may be a little bit of room. Now, banks outperformed supports for the, similar way, supports for the Nifty come in at 17,400 and 17,255. The 200-day and the recent low was 17,255. So those are supports. Banks outperformed yesterday again, although the index did end, and the index ended higher. Bank Nifty closed at 40,698. The resistance, again, retracement of the recent fall comes in at 4790. about 90 points away from where we are on the Bank Nifty. And then it comes in at 41,070 on the way up. And on the way down, as I've been saying, and it has not happened, 39,600 is the big level, which should not be violated for these kind of pullback hopes to remain well and alive. So that's the setup. As I said, no help from the globe, but maybe at lower levels, the attempt, the impulse to try and see this, try and stretch how far this pullback that we saw yesterday goes, perhaps is well and alive. Sonia, hi.
Absolutely. So the initial tick will be on the downside, right? I mean, the SGX Nifty is now at the lowest point, down almost about 50 points. So that's the big question that we're asking this morning. Will the pullback that we saw yesterday, will it sustain, or is it just a dead cat bounce that we saw in the market? Now, there are some positive cues as we wake up today. The FI selling has reduced quite a bit. And yesterday, as we know, the Nifty ended its 8-day losing streak. FIs barely sold about 420 crores in the cash market. So that's a good thing. Also, the Nifty is now well above the 200-day moving average of 17,384. So whether we hold on to that, time will tell. But at least that psychological mark has been conquered on the upside. The next resistance is 17,500. So we'll watch for that. A couple of other things. The Bank Nifty has actually recovered quite a bit from its lows as well. From its 52-week low, the Bank Nifty is now up over 20%. So there is some ground being covered on the upside over there. But it is definitely this 10-year yield that is dominating, mind space. The US 10-year yield has hit that 4% mark for the first time since November. So higher interest rate fear still exists in the market, and that could keep a cap on the upside for global markets. Brent crude continues to trend higher as well. It's now at $84 plus, so we'll watch out for that very closely. And in things to watch, Adani Group stock saw good recovery yesterday. The Supreme Court verdict on the Hindenburg report comes out today, so all eyes will be on that 10:30 onwards. But apart from that, for the market itself, million-dollar question, right? The pullback that we saw yesterday, will it sustain? See, the texture of this market has been very weak. So perhaps you'll want to wait and watch a couple of days before taking that firm call. But for now, the start looks like it's going to be in the red.
Well, guys, yesterday we partied, right? So it was good. But what
How hard, Nigel, last night?
No,
Nigel has had a good evening.
Weekdays, not too. But the market's partied, right? But what's next? Is it
metaphorically partied?
Is it the after party, or is it a hangover?
I mean, I think
what comes? So we'll know today.
Yeah, we'll know today.
We'll know today. So yesterday the Nifty participated, but the Asian equity markets itself, well, they were partying. So in that context, actually the Indian markets relatively underperformed, but nonetheless we broke that 8-session losing streak, so that's heartening. We've conquered the 200 EMA on a closing basis, so that's good. And the Nifty Bank, that's the one that's led the way. The ideal scenario will be if the Nifty Bank can head towards the 20 DMA, that's what will give the Nifty further legs. But the biggest positive for me this week is the broader markets have outperformed, and they continue to do that. Both the mid-cap and the small-cap indices yesterday as well, we did see a relative outperformance. The reason we went higher yesterday is because the market was heavily short. So there was some short covering both on the Nifty and the Nifty Bank. But in terms of the PCR, when it cools down to around 0.7 odd, that's normally a buy signal. That played out yesterday. Now it's closer to around that 1 odd mark. What do the FIs do? Well, they added some long positions. After a while, they added close to around 7,000 long contracts, though they continue to remain net short with their short positioning at around 82% odd. They bought some puts in case things go wrong, but the good news is they wrote puts as well. In an uptrending market, you want to see put writing. So between the 17,400 put and the 17,350 put, they added close to around 1 crore shares. Now, since today's weekly expiry, let's look at the two strikes that have the highest open interest. On the upside, the 17,500 call, it has more than 1 crore shares out there. And on the downside, you have the 17,400 put that has close to around 1 crore shares on. So you deduct that 25 rupees from around that 17,400 put, and you'll see that the bulls, well, they'll want to defend the 17,375 odd mark, which is important. The 20 DMA is at around 17,390. We're going to start off closer to around the 20 DMA. You'll want to defend that mark. The bulls will want to defend that mark. And on the upside, the Nifty Bank will want to move towards the 20 DMA, which is closer to around the 41,000 odd mark. Start in the red, but the bulls will come in to fight for that, for that 200 DMA, which is around those levels where we're likely to start, given that yesterday we ended at around 17,450. So in the Nifty, context, we'll be starting a little below that, which is the 200 DMA. So let's see how this goes.
Okay, well, lots to watch out for today in terms of cues. Of course, the first tick will be on the downside. But before we start, let me just tell you what's lined up in the first half hour of the show. We'll get you updates from the market across the globe. Abhilash Narayan of Standard Chartered Bank will be joining in to discuss the global trade setup. Later, our research team will bring you CNBC-TV18's list of top 10 stocks for the day. At around 8:30, we'll do a fundamental stock analysis with market expert Anand Tandon. But first up, on the equity side, let's get you a view coming in from Sanjay Mukim of JP Morgan, who says that the management sentiment for most sectors for sales volumes or margins has seen sequential moderation, barring staples and non-auto discretionary. Interestingly, the two large sectors, that is financials and IT, have also seen a minor moderation in management sentiment in December. He adds the management sentiment for the December quarter has been reflective of the Q3 result trends and slowing global macro environment, with adverse base effects impacting profit growth. Earnings growth remains concentrated in financials right now.
Okay, some money market views. Parul Mittal of Standard Chartered Bank says the USD INR continued to trade in a range this week. She expects the 82.25 to 83.25 to a dollar range to hold next week as well. She adds positive March seasonality effects will be in focus even as dollar stays the key market driver.
Right, and on the bonds, Parul says that domestic yields rose this week, tracking a spike in global rates post the core PCE data. She expects the 10-year benchmark bond yield to trade in a range of 7.35 to 7.45. She says global rates will be the key market driver, with the US 10-year nearing the psychological 4% mark. She adds that heat wave-led domestic inflation trends in focus as well.
Well, we have a lot of stock-specific action to track for you, and we'll get to that in just a bit in our special Top 10 segment. We'll be looking at Hero MotoCorp, Eicher Motors, Axis Bank, RBNL, BHAL, Titagar Wagons, HAL, Bharat Forge, Suntech Realty, and Electra Green Tech. Well, on the day, the SGX Nifty suggesting a downtick. Well, we have most of these stocks that will be reacting to positive piece of news, so maybe they could relatively outperform.
Okay, Abhilash Narayan is now joining us, Senior Investment Strategist at Standard Chartered Bank. Abhilash, good to have you with us here. Thanks very much. Markets in the US are repricing themselves to anchor themselves to much higher rates, Abhilash. So the environment for equities, once again, is a bit adversarial, isn't it?
Yeah, absolutely. And I mean, if you look at the market reaction in US over the past 1 month, it's starting to smell like a classic overreaction. Just 1 month back, markets were cheering that inflation will be lower than expected. Markets had priced peak Fed funds rate all the way to 4.85. 10-year yields were at 3.3%. And what's happened in just 1 month, based on just 1 month's data, we've seen a complete repricing of the curve. 10-year yields are at 4%. And if you look at market expectations of Fed funds rate, they've priced in 3 more additional rate hikes. And just based on 1 month's data, that seems like a bit of an overreaction. So we could see a correction coming through in the yields in the coming few weeks, I think.
There's still this interest rate fear, right? I mean, the hike in interest rates are not done just yet. So I guess that's creeping into the bond yields too. And in equity markets too, there is no conclusive recovery, especially in markets like India. What is your prognosis now?
Yeah, I think obviously we've seen that negative correlation come through. So we've seen bond yields rise, people getting concerned about tighter monetary policy. So a very similar sort of setup that we saw for bulk of 2022, especially in the global market context, and that's been weighing on equities. But I think the other key driver, which sort of goes beneath the surface, is when you look at earnings expectations in US and Europe, they have been consistently revised down over the past few months. And we think that, there is further downside to earnings for US and European equities, and that could continue to weigh on the global equity market. Obviously, in Asia, we are a bit more optimistic, so we think that earnings will be a bit more resilient in Asia, but obviously the global market trends would be a key headwind for Indian equities.
Hi, Vilash. Morning. In the past, you mentioned that you'll be tilting toward China versus India, Indian markets owing to valuations. You're still holding on to that thought? And also, I recall, we were discussing about emerging markets. Most of the central banks, they have moved faster. But what about the RBI? You believe there are more rate hikes even here in India?
Yes, so I think maybe let's start with the China question. So we are still overweight on China within the Asian equity context, and we are neutral on India. And I think the latest data that we saw from China sort of justifies that stance. So if you look at the manufacturing PMI data that came out in China just yesterday, was the highest reading that we've seen since 2012. So it's seeing a very strong rebound based on the reopening that we saw just a few months back. And we continue to think that investor inflows into Chinese equities would lead them to outperform in the next 1 to 3 months at least. As far as India is concerned and RBI, we think that the latest inflation upside and the potential for increase in food prices because of hotter than expected summer could lead to one more rate hike from RBI, so peak at 6.75. But we think that once 10-year yields reach 7.5 to 7.75 range, that would be a great opportunity to start adding to bonds.
Okay, all right. Thanks a lot, Abhilash, for joining in and giving us a quick update on what you expect as the way forward for global and local equity markets. Well, caution is still the name of the game. And, we're not out of the woods just yet. That seems to be the summary. But he's more optimistic, of course, on Asian markets, especially markets like India. Let's step into a quick break. Lots of stocks to talk about. So our list of top 10 stocks is coming up in minutes from now. Welcome back to Bazaar Morning Call. Plenty of stocks to talk about today, so let's begin very quickly. First up, you have a couple of these two-wheeler guys that reported their numbers post-market hours yesterday, the sales numbers, that is. I'm going with green both for Hero MotoCorp and Royal Enfield, and here's why. It's a double-digit growth for Hero MotoCorp in the month of February, which is good compared to what we've seen in the preceding months. So total sales for Hero has come in at 3.94 lakhs. Now, this compares to 3.5 lakhs in Feb of 2022. But even if you look at the preceding 3 months, it's been in a range of around 3.3 to 3.5 lakhs. In that context, 3.94 is good. Even in the scooter and in the motorcycle segment, Hero MotoCorp has seen an improvement. The company says that there's double-digit growth in February, consumer sentiment is improving, and this positive trend will improve in the coming months. So I'm going with green there. For Royal Enfield as well, in fact, both Royal Enfield and the commercial vehicle division saw a strong growth in the month of February. Royal Enfield sales went up 21% year on year. Month-on-month comparisons are not fair because February had fewer days than January. In that context, the sales were lesser. But commercial vehicle sales were very strong for Eicher Motors. A 40% growth is what we saw. So I'm going with green both for Eicher and Hero. I just want to make a point here that the domestic sales growth is picking up for all two-wheelers, whether it's Eicher, Hero, TVS, as well as Bajaj. But whether that lasts or not, only time will tell, because there is a weakening monsoon expected. There is the El Nino as well, which could dampen demand. So for now, things are looking good on the domestic piece, but the recovery should be sustainable.
Okay, all right, Sonia, thanks for that. Well, let's hop across to Abhishek. He was tuned into the Axis Bank on call yesterday. Abhishek, what are the takeaways?
Well, the key highlight to begin is that they said that the acquisition of Citi's India consumer business is at an accelerated time frame and ahead of schedule as well. So ROE for the Citi business is around 21.7%. So this is an ROE accretive deal that they have done. There is no hurry to approach the market anytime soon for fundraise. Remember that 177 basis point of CET1 will be eaten on account of this acquisition. So they would acquire 23,700 crore on assets, which is about 3.5% of the total assets, and about 40,000 crore of liabilities, which is around 4.5% of their liabilities. Now this 40,000 crore is actually lesser than their earlier guidance of 50,200 crores. So bank will take a one-time hit on their PNL in Q4 FY23 towards the write-off that they do on the goodwill part. So integration cost is about 1,500 crore, which is expected to be spread in the next 18 months. So, not much over there in terms of cost. So, good acquisition and good detail that has been given by Axis Bank. Back to you.
Okay, thanks a lot for that. That's an Axis Bank. But railway stocks are in focus this morning. Vivek is here to give us the latest on that. Vivek, over to you.
Well, good morning. Some important developments coming in. So, the tranche of 200 Vande Bharat train set orders, the bidding details are out, and there are 3 clear winners that we can see. First on our list is RVNL. Now, RVNL, in consortium with a Russian company, has emerged as the lowest bidder. Now, remember, this particular, Vande Bharat train set order was for 200 train sets. So, RVNL's estimated cost was almost 120 crore per train set, and, RVNL has 25% share in the JV. Now, very importantly for BHEL, which in consortium with Titagar Wagons, emerged as L2 bidder. So their estimated cost was 140 crores per train set. Now, what it implies is that if BHEL, as well as in consortium with Titagar Wagon, agrees to match the L1 bidding order, they too will get part of the order. So 120 train sets will be manufactured by RBNL in consortium with its Russian partner, and the other 80 train sets will be done or will be manufactured by BHEL with Titagar wagons. The total cost of the total order size is estimated at 58,000 crores, a significant order, and the L1 bidder will manufacture 120 train sets, and for this, the 26,000 crores is an upfront payment, and the remainder 32,000 crores will be over a period of 35 years, and this is for operations as well as maintenance.
All right, Vivek, thank you very much for that. But HAL and Bharat Forge are also in focus, aren't they?
Well, absolutely right. So HAL, what's actually happened is that the cabinet has gone ahead and approved buying 70 trainer aircraft from HAL, and the order size is worth over 6,830 crores. So it's a significant order win. This particular order will be supplied over a period of 6 years. Bharat Forge, newspaper reports are indicating that the Indian Army that had earlier proposed to buy advanced artillery gun system, it's in the final tranche, and the proposal is expected to be cleared by the Defense Ministry. This particular howitzer aircraft is expected to be done by both Bharat Forge and Tata Defense. Lowest bidder, similarly, 60% of the orders will get to the lowest bidder, and L2 will get the opportunity to manufacture the remainder 40% of the aircraft.
Okay, all right. Thanks a lot for that, Vivek. Well, let's hop across to Manglam. Manglam, you're tracking some more stocks and news?
I have two stocks on my radar, Nigel. We start with Sunteck Realty. They've signed an exclusive licensing or rather lease deal with Upgrad for one of their projects in BKC, for which they will get a lease income of almost 2,000 crores over the tenure of this agreement. So that is a positive. The other one I'm watching out for is Electra Green Tech, and that's because one of their e-tippers, which is basically electric buses rather, have been deemed central road worthy as per the rules. So as a result of which, now those could be sold and ply on the roads itself. And they've also closed in on 20 bus orders for these e-tippers. So that could be a positive. We are awaiting some more coming in on this front itself. Electra, however, has been buzzing around for the last few trading sessions. Expect some more green today.
All right, thanks a lot for that. So many stocks in focus this morning. A lot of the defense, railway stocks, Sunteck Realty. Here's a quick recap in case you missed out on any of them. Hero, Aisha, good numbers coming through. Axis Bank, RBNL, BHEL, Titagar Wagons, HAL, Bharat Forge, Sunteck Realty and Electra Green Tech. Well, guess what? There are no stocks on our radar with negative news flow. But one thing that is perhaps not working in our favor is the way crude is moving. Brent crude is now back close to $84 a barrel. Manisha Gupta is here to give us a quick roundup of all the action there. Manisha, good morning.
Morning, Sonia. Thank you for that. Well, yes, fourth straight day of gains coming in for the crude oil prices, and we could very well be closing this week in the positive here. The strong Chinese PMI data, Russia cutting oil exports, and weak U.S. crude output and very strong exports are some of the reasons that are keeping the crude oil prices on the higher side. Markets also will want to watch out for what the OPEC did in sense of production for the month of Feb. And with Russia cutting output from the month of March, is there going to be any increase at all is something that the street will keep an eye on. In the meanwhile, it's not just crude. The metal prices have continued to gain for a second straight day. Yesterday, overnight, you saw 1 to 2.5% of gains coming in across markets. The decline in US dollar index has been yet another supportive factor. And today in Asia as well, it is a very strong rebound, whether it's about energy, metals, and industrial commodities like cotton and rubber also seem to be trading at multi-week highs right now.
China and the PMI numbers really keeping things on the boil there. Manisha, thanks very much for that. We'll take a very quick break. We are back. Anand Tandon will be with us for some fundamental stock talk. Later, we'll also have the management of Krishna Institute of Medical Sciences, KIMS, to discuss the occupancy levels in the post-pandemic period, especially the two acquisitions over the last few years and how they're doing. Stay tuned. Those conversations lined up next.
Welcome back. You're tuned into Bazaar Morning Call. You're on CNBC-TV18. Well, overnight you had the dollar index that rebounded from around 104. It's holding at around 104.5. The bond yields as well got past that 4% odd mark, and that's why global equity markets in a bit of a tizzy today. Though yesterday we had a very good trading session. The SGX 50 for starters, in case you're just joining in, it's indicating that we're likely to start off on the back foot with a cut of around 50 points. The good news, though, is that not too long ago it was suggesting a 70-point decline. So maybe we'll start off in the red, but not that much. Well, let's get to Anand Tandon, who joins us to give us his view. And let's analyze a couple of stocks as well. Hi, Anand. Good morning. Thanks so much for joining in. Anand, it's the start of the month, so we obviously look at the auto sales numbers. And Sonia was just telling us that Hero MotoCorp as well as Aichi Motors, both those numbers look pretty good, those two-wheeler makers. What's your sense? I mean, how do you approach these two-wheeler companies, and any preference out there?
Well, I think, the two-wheeler space is a little bit of a problem area in my view right now, because there are a whole lot of, unlike most other industries that you are seeing consolidation in, here is one sector where there are, large number of almost 20 plus EV manufacturers which have come in, and that's the one place that we are seeing a lot of offtake in terms of EVs. So till the market shares kind of settle down, I think it will be a little iffy to take a call on where you're going to be. Bajaj is obviously out in terms of its export markets. So if you're looking at the domestic players, Eicher to some extent is better off because of the product profile, and that is a lot more, because it works on brands and it's a lot more iconic and aspirational. So from that point of view, if you have to look at two-wheelers, that is probably a safer place to be. In the usual 100-150cc kind of category, I would argue that it's best to avoid that space right now, because you will have shifting market shares, and it's a little difficult to see how the entire thing will pan out at this stage.
Okay, so avoid the two-wheelers for now. Let's move to another mode of transportation, then railways, right? Anand, there's so much being done here. In fact, the bidding details for the Vande Bharat orders are now out, and there are some key beneficiaries, whether it's RVNL, which has emerged as the lowest bidder. There's BHEL in consortium with Titagarh Wagons as well. Do you like any of these stocks from a long-term investor standpoint?
Well, if you look at this particular order and you see Mr. Money's comments in the papers today, Mr. Money being the gentleman who was actually responsible for getting the Vande Bharat designed and manufactured in India at the Chennai factory, he seems to indicate that this is a desperate bid from the Russian parties, and that would mean that the implementation of this order may actually get delayed. So if you were to take that kind of view, then obviously much of the upside that one would expect from a business of this size is not going to happen. Also, to some extent, estimating the kind of maintenance figures for the next 35 years is always going to be a bit iffy. Assuming that you do assume that you can actually make these trains at this price and sell it in India, obviously the manufacturers will benefit to the extent that much of this, almost 80% of the Vande Bharat, has been designed and manufactured in India with only a few components imported. There should be a lot of beneficiaries scattered around, not necessarily the shareholders that will be manufacturing it. But I don't know the names at this stage, and you have to actually wait and see where the order flows move. It would be simpler perhaps to just look at companies like making gears and so on, which undoubtedly will be providing some kind of products into almost any of these manufacturing facilities. And therefore, look at that. And so any heavy engineering company should actually benefit in some form or shape.
Anand, hi, morning. One smaller group of stocks yesterday which were buzzing quite sharply, the innerwear makers, Rupa, Lux, Dollar, all 10, 14, 15%, all bashed up, so maybe bounced, but all bounced up together. Do you own any of them, anything in that pack? The leader Page, of course, was flat, slightly higher. Any view on the space?
Well, from what I understand from the industry, they've been going through a very, very tough time and trying to boost up sales even at marginal profit or loss by having a lot of one-for-one free kind of sales push-up strategies. Maybe that situation may have changed in the near term, and consequently, given the fact, as you said, these are beaten down stocks, there could be a possible turnaround. Clearly, the kind of valuation that they are at is not very demanding right now. Sorry, valuation considering a normal business situation. As I said, the business situation right now is, at least till a few weeks back, was fairly bleak.
All right, Anand, stay with us. We'll just continue this conversation. We have a hospital company with us. You might want to listen in to the conversation. Krishna Institute of Medical Sciences is the company, is the first corporate that we are speaking with today. What are current occupancy levels like, and how's business coming through? We have Dr. B. Bhaskara Rao, Managing Director at Krishna Institute of Medical Sciences, joining in to take some questions. Mr. Rao, thank you very much for your time. Great to have you with us here. Thanks very much for coming on. Could you tell us how have the first 2 months of the fourth quarter panned out, especially for the Nagpur hospital, Mr. Rao, if you can start there, because that is the one asset out of which there is a lot of expectation that ramp up will happen and it will start contributing to numbers in a much bigger way. That's a 300+ bed hospital which you acquired in September of 2022. What's the status in the first 2 months of Q4?
Good morning. The first 2 months of Q4 is better than what we expected. Any new place, whether it may be in our home place like in Andhra and Telangana or outside, what our vision is that whenever we acquire, it will take about 1 or 2 quarters to set right, build our culture and make it more efficient operationally and cut down all the costs and what are the unnecessary expenditure, and also get the new talent and also add new therapies. Even though that we are being on the line, it will take about couple of quarters to establish. So we are as we planned, we are doing everything accordingly. So now the ramp up when compared to the last 2 months of this quarter is very promising, and we are delivering what we are expecting. We are very, very happy that the way what we expected, we are doing much better than what we expected. But another 1 or 2 quarters, it will turn around the best in our own acquisitions.
Could you, Mr. Rao, give us some specific numbers? I think the monthly run rate was about 13-14 crores, a revenue run rate. What was it in January? What was it in February? What were occupancy levels like? I think they were at about 55% or so. Just some numbers would help, sir, for Nagpur.
Yeah, basically what happens as I mentioned that we are in the nearly 4 months right now we have been there. We need to set right few consultants who are not required to add more in the same department. We are acquiring them. Even if we are able to issue as appointment letter, they have to resign and come back. It will take little time. So in these 2 quarters, definitely what we expected is growing, and moving forward, you can able to see the much better results in the next 1 or 2 quarters. But in the last 2 quarters, definitely there is an improvement. Last 2 months, and we are also asked to look into the changing of the payer mix and trying to get more and more cash and insurance patients. A lot of corporates are there. All those things, usually it will take a couple of quarters to establish ourselves. The growth starts once we acquire from 3rd quarter onwards.
Okay, all right. Hi, Dr. Rao. Good morning. But we are not getting that occupancy number. Could you tell us, as of quarter 4, what is the occupancy as of now?
Quarter 4 is around nearly 45-50% is there on the occupied beds. We have 330 beds. Out of that, 250 is the operational beds. In this operational beds, we are around nearly 60% is the occupancy. Whenever there is a need, we can able to increase our operational beds. So moving forward in the next 2 quarters, we may touch about 70-75% of the occupancy.
All right, Dr. Rao, for the entire company, on the whole, I'm trying to get that number. I think you're referring to some of these acquired assets, the occupied beds, because the reference point we have is as of quarter 3, you were at around 68% occupancy. So what is it now for quarter 4?
It will be above 70 plus. The reason
70% as of now.
Yeah,
Got
70
it,
plus.
Yeah. Okay, what about the average revenue per occupied bed? You know, you were guiding for around 29 to around 31,000 odd. It's still in that range?
Yeah, it is the same. See, basically, we have so many hospitals. The average revenue per operating bed varies from unit to unit. Where we are in
Okay.
districts like Telangana is very high as compared to all other hospitals of the metro. Whereas in Andhra, we have a lot of scheme patients. So the average revenue per bed will varies from 10,000 to nearly 45,000 rupees is the variation from unit to unit.
Okay, all right. So on an average, it's around the 29 to 31,000. We got that. International patients or medical tourism for you is not a large part. You've mentioned this in the past as well. I think it was only around 1%, but you were looking at taking that up to high single digits. So for FY24, what is the target that you have from international patients? And are you seeing a lot of inquiries coming?
There is a lot of inquiries are coming now. Because of the air connectivity and as we have a lot of patients domestically is available, we haven't concentrated so far. Now we are moving into the Maharashtra and Bangalore. Definitely, now we are putting a ground to see that once these two units are going to up and running, we will try to focus more and to bring the international patients.
So you think by in FY24, FY25, you can see around 5% contribution coming in there?
I think definitely. From 24 to 25, there will be definitely a growth.
Around 5% odd of your total revenues?
May not be 5%. We'll start with now, as of now, it's around 1%. Maybe slowly 2 to 3% may reach up to 5 to 6%.
Got it. All right. Final question then, Dr. Rao, before we let you go. What is your total bed capacity as of now, taking into account these acquisitions that you have done? And where do you see this number headed? Are you still on the prowl? Are you still looking at inorganic growth?
So as of now, we have with these acquisitions about 4,000 beds are there. Out of that, 3,000 is the operational beds. And we are also adding in the next 2 to 3 years about nearly 2,000 beds as we promised during our roadshow. And in the beginning of IPO, we are all on track. What all we want to put in Maharashtra, in Karnataka and Tamil Nadu, we are maybe another 2 to 3 years down the line, total bed strength will go up to 6,000 beds.
Okay.
Mostly brownfield and semi-brownfield, except one Nasik.
Yes. You said 6,000 by when, sir? You said?
25.
FY25. Got it. Mr. Rao, thank you very much. Good speaking with you, sir. And good luck to you and the company. Thanks indeed. That's Kim's with a quick check on things. Anand is still with us. Anand, you know, Kim's trades at a discount, at a reasonable discount to the bigger players like Medanta or Apollo Hospitals, of course. Any interest here? Have you looked at the business model? I'm sure, I mean, sitting where you are, you're familiar with the hospital chain.
Well, that is right. This is a company which has, so unlike many of the other hospitals, if you look at the balance sheet, they are not particularly leveraged. And as you can see, the numbers look quite astonishing in terms of the growth forecast. If you're moving from 3,000 to 6,000 beds, you're obviously going to make a lot more money than what you are today. The challenge is, whether or not the valuation is justified at 10,000 crore plus market cap. You are already pricing each operating bed at more than 3 crores. Today, if you were to look at even a metro city, you should be able to make about a bed per crore. And if you are going to do really high speciality, maybe it will go up to 1.5 crore. So you are already paying twice that, but that is what you should expect to pay for something which is already operational and something which is making reasonable amount of cash flow. So from a portfolio perspective, I think if you are looking at the healthcare space, and I do expect that this is an industry where consolidation will continue to happen and the corporate chains will grow bigger and bigger, Kim's would feature right up there, I would imagine.
Okay, Kim's features right up there. Good to know, Anand. So we got that view out. What about mid-cap IT companies? The street is split out there. You have a couple of these stocks, Emphasis, Birlasoft. They did quite well, but they've come off considerably from the top. Any view on mid-cap IT? Would you look to buy some of these names, or do you believe still, in fact, we'd like to see pressure on growth, margins from here on?
So I'd take a very simplistic view because each one of these companies obviously have the separate specialization, and some of them will have portfolios which will be a little more insulated from the overall market. But if you were to look at the situation where for at least the next 12 months it appears that most of the client companies are going to be able to or will be focusing on takeout, expense takeout kind of business rather than actually investing in their own growth, then the number of vendors also falls. And whenever you're looking at a falling number of vendors, it is very rare that you will find that smaller companies are the ones that get retained. In fact, it will be the larger ones that will get retained. So I would argue that this year, both for stocks in general and for IT in particular, you should be looking at the larger companies to position rather than trying to be very finicky about specific smaller companies. Obviously, special situations notwithstanding, there could be some cases here and there. But I would focus on the larger ones. And, despite the fact that they're a little more expensive than the kind of growth rates they're likely to witness, from a portfolio perspective, I think you need to be at least in some positions in IT. And I would imagine things like Infosys and HCL Tech are probably, relatively better valued given their growth profiles.
Got it. Anand, we got the China PMI numbers. It's purely as a trade, right? Metals look good to you? Any thoughts at all?
I'm sorry, I didn't get that.
Do metals, steel, non-steel, etc., look good to you from a trading perspective?
Well, I don't want to take a call on the trading part of it, but overall, I think, metals, if you have to be, again, I would imagine that non-ferrous is better than ferrous. And most of the other metals which may be interesting are not really in India's basket anyway. So, there is not much that I would like to do in metals per se.
All right, Anand, we'll leave it there. We'll take a break, actually, and we'll come back with more. Just still, 14 minutes to go for 9 o'clock, which is, of course, the pre-open. The SGX rate should come up on your screen. And I think it was indicative of a 50-odd point lower start. Our technical experts will also join in. Mitesh with Sudarshan with what they're making of things and trades they'd want you to take. Stay with us. That view comes up next. All right, welcome back. Just 10 minutes to go for the pre-open session. Anuj is here in the studio to run us through what he's making of things. We get a lower start, but what after? Anuj, morning.
Morning, Prashant. Like we discussed yesterday as well, the market shown some sign of bottom, and it's actually in some sense a bit of a double bottom because budget day intraday lows have been more or less defended, and especially on the bank Nifty. And the Nifty managed to reclaim the 200-day moving average yesterday and closed above it. The broader market started to show recovery signs before that, of course. So fresh decline now only if you start to break the recent lows. Otherwise, the texture perhaps now changes to buy on dips instead of sell on rally, as long as the Feb low of 17,255 is holding. And the bank Nifty is likely to lead the next rally, as it's shown over the last few days. Of course, the only test the market faces today is this 4% bond yield in the US. But, this was coming. So, in some sense, the market was prepared for it. I think today's gap down perhaps gives an opportunity to see if the texture has indeed changed from sell on rally to buy on dips.
Okay, thanks a lot for that. Let's see if the texture has changed. Perhaps it's too soon to tell. It's just been one day, one trading day. But Sudarshan Sukhania and Mitesh Thakkar have joined in to tell us how to approach the market. Sudarshan, yesterday was a relief, and I'm sure a lot of bulls heaved the sigh of relief as well. Do you think this pullback could extend itself today over the next few days? And what are the markers on the index now?
Yeah, good morning, Sonia. I wish I could say that it will extend because we are all bored of that 8-day decline. But there's no way to predict that. What is easier to say is that we've had a rally yesterday. We could see a small gap down today, and we have a level to watch. So the markers are easier to identify. 17,350 is the low for yesterday. So far as that low is being defended, so far as the Nifty remains above this low, we should be looking to buy the Nifty either when it consolidates or if it recovers from the gap down. Below 17,350, close your long positions and step aside and just watch.
17,350, important mark. All right, got that. Sudarshan, Mitesh, what about you? Morning, how are you feeling this morning?
Morning, I think yesterday was a good reversal. The bank Nifty between the two indices is the stronger one. But the Nifty also looks like, it's possibly trying to attempt a pullback, which will be much better and much healthier than what we have seen in the last few days. And therefore, I think today's gap down for me would be a buying opportunity. I think the first intraday support comes in at about 17,400, 420 levels. So I think a 50-point gap down, a 45-point gap down would be a welcome level to, start taking fresh longs or adding on to your long positions. And I think Sudarshan also mentioned this, around 17,350, 340 is a good support, so that becomes the stop loss. I suspect the first levels on the upside would be about 17,520, some intraday averages converge there. But I think eventually we have the strength to go towards 17,620, 650 zones, which is where I would want to take profits on long positions. So very clearly trading with long bias till we see the Nifty sustain below 17,350, 330 levels for an hourly close.
All right. What about individual stocks then? Sudarshan, let me begin with you. What's on your list this morning?
It's a mixture. Alchem is an intraday short. We had two big declines on that stock. So something is going on there. Intraday short with a stop above 3150. As Mitesh also pointed out, as we understand, the banks are outperforming. So Axis Bank is a buying opportunity. It's at its lows. So if there is an outperformance, we can see a decent bounce on the upside. Stop under 840. Dabur is a surprising FMCG stock which is going down while some of the others are now bottoming out. So Dabur is an intraday short with a stop above 537. And MCX is a buy. It's a buy on dips opportunity. We are hoping that the lows will be held with a stop under 1405.
Mitesh, what about you?
Prashant, in line with my positive view, I have more buy calls today, 3 buys to a sell. Federal Bank, I think, and I think that's a stock which was doing very well before this entire correction happened, and now I think it seems that the stock is ready to get into an uptrend again. So that's a buy with a stop below 130 for a target of 140 to begin with. Manappuram is a buy. I think it reversed from very oversold levels. So that's a buy with a stop below 103.5. A first target of 110 can be looked at. And also buy on Coal India with a stop at 216 for a target of 225. On the selling side is Godrej Consumer. Keep a stop just above levels of 925 here and a target of around 885, 882 on the downside can be looked at.
Okay, all right. We have Manappuram management joining us a little later on the show as well. Thanks very much, Mitesh and Sudarshan. Appreciate you joining in with that. We'll come back. There's 5 minutes still for the pre-open session. Amit Dikshit, analyst at ICICI Securities, will join in to talk about demand trends in the metals space. Stay tuned for that.
Different ages, different